Hi CA students, let's revise CA Final AFM, Chapter 8 Mutual Funds, Practical Question 10. Mr. Sinha has invested in 3 mutual fund schemes as per details below. Date of investment is given for the 3 schemes and the amount of investment and net asset value on entry date. Entry date is nothing but when we bought that schemes. And dividend received upon 31st March 2009 is given, and NAV as at 31st March 2009 as also is given. You are required to calculate the effective yield on per annum basis in respect of each of the schemes. So effective yield is nothing but whatever return we got from the date of investment till the NAV date as on 31st March 2009 here. So from this entry date till this date, whatever is the return, that is the effective yield on a per annum basis. So let's say if the difference between these dates is 121 days, then we'll be dividing the return whatever we got by 121 multiplied by 365 will give us the effective yield on per annum basis. They are asking us to do as on 31 March 2009. Okay. Now going to the questions. As we have previously discussed, what and all returns we will get in a mutual fund divided by the investment will give us the return either monthly or annually or whatever the case may be for the period actually. So in this case, there are two things given. One is the dividend which we got, which is a direct income, and then there will be some capital appreciation, which is an unrealized gain. They have not given anything regarding whatever is the for this mutual fund sold, so there is no realized gain here, which will be 0, and the investment is given as 5 lakh. Now we need to find out the number of units in all these three cases. So in the first case, 5 lakh investment on the entry date is 10.5. So 5 lakh divided by 10.5 will give us the number of units of scheme X purchased, which is nothing but 47,619.5 in the first case, and 10,000 and 5,000 in case of Y and Z. Now there are two incomes as we previously told. One is this dividend received, which will be an income, and capital appreciation or capital reduction. In the first case, as we can see, 10.5 to 10.4, so it has reduced 0.1. So if we multiply this 47,619.5 multiplied by 0.1 will give us the decrease or increase in NAV. In the first case, it is decrease in NAV. So 47,619 multiplied by the differential portion, so 10.5 minus 10.4 will give us the increase or decrease, right? Which is nothing but the capital appreciation. So the decrease in NAV in case of X is 4,761.88, and there is a dividend received of 9,500. Net of total yield is 4,738.12 in X, mutual fund X, scheme X. Now in the second case, the from entry date till the end of the financial year, there is an increase of 0.10. So multiplied by the number of units. So number of units in the second case is 1 lakh divided by 10, which is 10,000 multiplied by 0.1. So there is a capital appreciation of 1,000. And there is a dividend of 1,500. So the total yield is 2,500 in the second case. Now in the third case, same 50,000 divided by 10 will give us the number of units. 50,000 divided by 10, 5,000, and multiplied by, there is a reduction of 0.2. So 5,000 multiplied by 0.2, 1,000, there is a reduction of NAV of to the extent of 1,000, which is an unrealized loss, and there is no dividend received in the third case. So there is a net loss only. Net yield is negative in case of mutual fund Z scheme. Now whatever yield we found out is for the period of investment. In the first case, our period of investment is from 1/12/2008 to 31/3/2009 is 121 days. In the second case, it is 90 days, and in the third case, it is 31 days. So as we can see here, the period of investment changes. So the yield which we found out is for these respective days 121, 90 and 31. 121, 90 and 31. Hence, if we divide the yield divided by the total investment, let's say in the first case if it is 4738.12 divided by 5 lakh into 100 will give us the yield percentage for the period. 4738.12 divided by 5 lakh, which is into 100, which is nothing but 0.9476 percentage. Now this is for 120 days, 121 days. So this divided by 121 into 365 will give us the yield for the whole year. So divided by 121 multiplied by 365 is nothing but 2.8585 percentage, which is same as what ICAI has given. So the same way, the total yield divided by the investment will give us the yield percentage for the period, but that is only for 90 days in case of 2. So divided by 90 into 365 will give us the effective yield per annum, which is nothing but 10.139. The same case goes with mutual fund Z also, where there is a negative yield. That's it. Thank you.